Hello, I'm Donald Leggatt, and welcome to the latest London South East CEO interview. I'm joined today by Graham Lyon, the new executive chairman, or perhaps not so new, he's been there 4 or 5 months, at Sound Energy. As you may know, Sound are an AIM-listed gas explorer and developer with assets in Eastern Morocco. Welcome, Graham.
Thank you, Donald. It's good to be talking to you with my Sound Energy hat on this time.
Indeed, it's terrific to see you in your new role, or not so new, given that you've been there 4 or 5 months. How have you found it? What are the strengths? What are the challenges of the business that you've just inherited?
Yeah, well, inherit is a good word. Sometimes people say it's a bit like a poisoned chalice. You know, we had a reputation that the shareholders have certainly struggled with. We've got a recapitalisation issue in Sound, but there's lots of positives, I think, in Sound, and that's what attracted me to come to Sound and take on this role. The key thing is, of course, it's in Morocco, and as you know, Morocco is a very good country to do business in. It's an investment-friendly country, so once you start your cash generation, your profit making, you've got the 10-year tax holiday. Sensible corporate rates of tax. So Morocco is a good place to do business in. And
the rule of law in Morocco is quite strong, is it?
Sorry?
The rule of law is quite strong in Morocco?
I think it's considered one of the best in Africa. And recently the UK have decided that they will base their trade envoy for Africa in Morocco, in Rabat. In Casablanca, I think it is, because they see it as the best place to do business in Africa and to use that as a base. So, yeah, I mean, Morocco is offshore Europe a little bit, isn't it? With the rule of law being very French, but very credible. We've got a lot of acreage in Morocco and with significant exploration potential. So that attracted me. Although I'm not an explorer at heart, I think that's very positive. Net to Sound, we've got 310 BCF of discovered resource. And in a country where the gas price is high, you ought to be able to do something with that. So I'm really pleased with that. And we've got a good supportive shareholder. 20-odd% of our shares are owned by OGIF, the state. So I mean, those are all positives to join. And then what I found when I turned up in Sound was that we've got a very good organisation, a very slim organisation, but a very competent organisation. And the people are very motivated and are very, very hardworking. I mean, the hours that people have put in over the last 3-4 months since I've been here is unbelievable. So I mean, those are things that attracted me. And we've got challenges, but as you can see, we're taking small steps forward each time. We're doing a little bit, a little bit, a little bit. And what we're trying to do is leverage on every step we take forward.
It's good to hear. Okay, despite the COVID lockdown in Morocco, you've been making good headway. You've announced ahead of terms for the micro LNG project. If you could briefly talk us through that project, the revenues you hope it will deliver, and how it fits into the strategy.
One of the bigger steps we took forward was the heads of terms on the micro LNG. And that all came from, I think, what you've probably heard, you've seen that we've done is we've sort of retweaked the strategy to look for cash generation in the company. Cash generation is important for multiple reasons, and particularly during the COVID environment, you can see that cash preservation for lots of companies, cash business is so important to keep the company going. And you see, British Airways or IAG looking for multi-billion dollars of equity investments to keep their business going. So if we can convert Sound step by step into a cash generating machine, that's the way to do it. So part of that was to break the project down, to do a 350 odd BCF development for Sound in one bite. It's probably a little bit too much to take off in one go. So breaking it down into the various smaller portions, I think is quite good. And the micro LNG is a well-known technology. It's used in various different countries. And I think earlier in one of my first interviews I did, I explained that I've done a micro LNG project before, and that was very successful.
So smoothly on to your exclusive discussions with the Moroccan LNG offtaker. Tell us more about that conglomerate that you're dealing with, and why are they a good fit?
Yeah, I mean, that's something that we need to explain quite well. And unfortunately, at the moment, we can't release their name. But they are a very big retailer of and distributor of fuels in Morocco, quite well known to everybody. And as Morocco transitions itself away from the more carbon-intensive fuels, transition to something like LNG would be good. And LNG is a new product in Morocco, so we felt it better than Sound Energy turning up to customers and trying to sell them an LNG product, that we go with a distributor who's well known in the country, has a lot of credibility, and it'll allow the customers to transition from using LPG to a less carbon intensive fuel with LNG.
Makes good sense. And if you could confirm that the off-taker pays for the LNG transport?
Yeah, so I think there's been some misunderstanding. And we're a wholesaler of LNG. We will sell the LNG at Tendrara, and the distributor who buys the LNG from us will truck it. They'll truck it maybe even up to 1,000 kilometers away to the end users, to the customers, and they will store it and regasify it for the end user. So the price we get for the gas, and we publish that price. You add on the distribution costs of transport. They'll probably use LNG ISO container trucks, and then the regasification. So the end user will pay a price that'll include the distributor's transportation and regasification costs. So yeah, we sell FOT, free at Tendrara, the LNG.
This may well be commercially sensitive, but hey, let's ask anyhow. What are the estimated capex costs for the micro LNG project? What does that include? And where are we with the FID, the final investment decision? Will COVID get in the way of that, do you think?
Well, COVID's getting in the way of everything, but yeah, we're pressing ahead. And for final investment decision, you need essentially three things. You need sufficient gas volumes, and we've got that. We've got CPRs to prove we've got that. You need a good 10-year take-or-pay gas sales contract, and we've announced the heads of terms, and we'll conclude that hopefully this quarter, maybe next quarter, and then finally you need all the financing in place and a good and the EPC contractor. So I'm talking with 3 different EPC contractors at the moment, and so I'm not going to be explaining what the competitive bids are, but it's fair to say that I've mentioned numbers in the past that'll be at the top end of that range. So if all those 3 things come together, financing, contractor, gas sales agreement, yeah, there's no reason why we shouldn't be taking FID this half year, and certainly that's our target to do that.
And how are the discussions with the contractors going? Slightly cheeky question, but hey, if you don't ask, you don't get.
When I started this, we were in single negotiations with one contractor who is probably the lead contractor for us at the moment, but since we've restructured and phased the development, we have a couple of other contractors who've come along and said, actually, we like the idea of this step-by-step approach, and we'd happily consider looking at getting involved with you for phase 1 and phase 2. So to be fair to everybody, we've tried to manage both these things in parallel. And yeah, but the conversations are going well, and you know, I'd hope that in the not too distant future, we'll be able to update the market on where we are with the FID.
Okay. If the conglomerate are providing some of the funding, what are your funding options beyond that? You've just had a successful placing and a really interesting broker option, and between those 2 things raised £3.5 million. What are your thoughts on debt and equity going forwards for everything else, and the bond, of course, which needs to be restructured?
There's about 5 questions in there.
Sorry.
So let's start with the placing, because that's the most recent thing that's happened. And you're quite right, we did a placing. That fund sounds sufficiently that we'll go through the FID periods. It will take us well into next year. I think we announced it will take us through until March for working capital. The only reason it won't take us through till July next year is because we have the bond, and that's clear on everybody's agenda. And I think we've got several challenges inside Sound to deliver on all of these areas. But if I say that we've broken it. I'm an engineer by background. We've got to have 3 different options to solve a problem, and we've got different options to solve all these problems. And now for us is to execute on that. So we've never missed a bond repayment coupon, and we don't intend to do that. We've got 3 more before the June redemption comes up. By that time, we'll have will have dealt with that issue. I'm confident. Going back to the placing, if that's okay with you, I think we did the placing for obvious reasons. We did make it open to our shareholders to participate with the broker option, but I think also you should note that we did this at market conditions, which is not very common in today's market. I mean, clearly I could have probably raised twice as much money with a 50% discount on the share price or a 25% discount on the share price. But that's not the intention. The intention is obviously to raise the sufficient funds to get us to the next stage, step by step, and leverage that. So we actually only need this amount of money to get us through to the FID. And the ratio, if you like, of the funding we raised as equity, if you combine that with the money that's announced in the heads of terms, which is 13.5 million worth of debt and 2 million of equity, it sort of puts a debt equity ratio of 2/3, 1/3. And now clearly to finish the FID for the financing, we've got to put the last bit of financing together. And that will probably bring more debt onto the books. I think it's unlikely, and please, I'm using the word unlikely, not impossible, but it's unlikely that we'll use equity to fill the gap to get the funds together for FID. I think there's enough alternatives out there for us that in the end, it will probably end up at something like 20% equity, 80% debt, which is not unusual for a project finance.
Okay. And as you're obviously very busy making detailed plans to deliver that gas from the ground, but meanwhile, are you still looking for a buyer for the business?
Yeah, well, I think before I joined, just a week or so before I joined the company announced that it had finished its exclusive negotiations, or the exclusive negotiations with the buyer had expired. And then since then, to be fair, I have a hold value for the asset, and that's the value that I would like to deliver to shareholders and have that reflected in the share price. There's no point in selling off cheap, and we had some cheeky proposals to us because they thought we were on our knees and we're in big trouble. Yes, we're not exactly out of the woods yet, but we have a plan and we've executed on it, and 2 or 3 bits have already started to come through. So, but what we have found is that a different group of buyers have all said, oh, we quite like your LNG phase development. We quite like your staging and getting cash into the business, being able to recycle that in investment, etc., and going for exploration. So we've signed several NDAs for people to come have a look at the business. There's groups in the data rooms at the moment, and potentially even some of the EPC contractors would be interested in taking some position and funding it as they go along. So I think the overall sale of the business that passed in February, but bringing in somebody else into the project, we're not anti that. I would call it normal business development, but it has
a sort of farm-in type arrangement.
Yeah, and particularly on the exploration acreage we have, we've got we've got interested parties coming in to look at our exploration, and you saw, I think in a previous interview you did, somebody mentioned that ConocoPhillips has just come into Morocco and taken acreage right next to ours. So they've obviously got their eyes on something down there. So yeah, look, we'll certainly consider farm-ins, but it has to be a good deal for sound shareholders.
How happy are you that ConocoPhillips have turned up?
Well, it's always good to have somebody go into the country that's got a lot of credibility, particularly when they make a corporate statement that we're not going to do exploration, we're going to do this and we're only going to do that, and then to go ahead and do exploration. So I think that shows you that they've high-graded their worldwide portfolio, and Morocco comes very well on the list. And it is a combination of, we know there's gas there. The issue is the Taghi reservoir, of getting it to produce and finding the locations. And I've got an excellent exploration manager with John Argent in our company, and he and I have been working on, with my little bit of grey matter from reservoir engineering, we've been working on having a good look at the pressure data from some of the wells and matching that with productivity. So, I mean, we haven't given up the day job, which is to run an oil and gas business and understand the geology. Okay,
fantastic. Talk me through phase 2, the Tendrara gas pipeline and all those things. Where does the gas pipeline go to? Where are you with it? Where are you with everything?
Right, so we don't have a gas pipeline. What we are trying to do is put a 120-kilometre pipe into the main pipeline that takes the gas from Algeria into Europe. We have signed a MOU with ONEE, and we announced, I think, back in April that because of the COVID restrictions, we've really struggled to engage with ONEE. That is back on track. It's happening. And signing this agreement is subject to several things. It's not just in Sound's control, but I can say ONEE and Sound both want to get this signed up. The devil's in the detail, and part of that devil is in the development plan for the field and proving up those three areas: the reserves and the financing and the engineering. So yeah, that's all coming along. In fact, we have a meeting tomorrow with ONIM to discuss concession activities and concession development. So, you know, we are taking all the various steps to go forward with that, and it's a phase. It's phase 2, but it's a parallel process, phase 2.
Okay, now I'm hearing this. So it might be the end of the year, perhaps into the spring, before we can, before you're simply able to get that gas sales agreement signed off.
Well, priority and I think achievable is the micro LNG FID, and that will be this year. No, I think we'll sign the gas sales agreement with ONEE, provided I have the authority to sign it. I think we'll sign that this year, if not earlier than the end of the year. And then I said we've got to bring in the other elements to the party, the financing and the EPC contractors. And Sound have been discussing, and I think it's been announced in the past, that we have contractors who are interested in the pipeline with a boot type system. So yeah, putting the financing together on that is being done. And as I say, we are talking to new engineering contractors who are interested in supporting Sound in the whole Tendrara concession rather than just the micro LNG.
Okay, final question. What will Sound look like in 2 years' time? You've taken me through so much in this interview. How do you see it looking in 2 years' time?
Look, what I would like to see and what I'm targeting being is a cash generating business. We'll have been taking small steps to get to that stage, but we'll be a cash generating business in 2022. There's absolutely no reason other than COVID and finance and X, Y, Z that we shouldn't have the micro LNG producing, and that we shouldn't be well on the way to getting the pipeline producing. And I think, you know, the cash flow out of those projects generates very significant free cash to Sound. I mean, we could pay the bond back, if you like, out of that level of cash flow. But where we see ourselves, cash flow generating, a company that employees are proud to work for, a company that shareholders are proud to be shareholders of, that joined the party in the early days at 2p a share or whatever we are today, and are looking at a business that's gone forward. And I'd also hope that we've got a better reputation in the industry so that people want to partner with us in expanding our business. So instead of taking small steps, we can take bigger strides, if you like, and grow Sound even further.
Graham Lyon, Executive Chairman at Sound Energy, thank you so much for joining us. If you like this interview and you'd like to see more like this one, please subscribe to the London South East YouTube channel. And finally, thanks very much for watching, and remember to stay safe. Thank you.